quite a few questions, so let me start first with a couple. The first question is from Ming Nguyen from Mirai. Could you please update the progress of Vingroup's electricity projects? Any license secured? Thank you. So renewable energy is one of the key strategic pillars that we have recently introduced to our business portfolio. And this is primarily going to be developed via VinEnergo, a dedicated platform for energy development. So to date, VinEnergo has identified a very solid pipeline of renewable energy, primarily in the form of solar and wind. And it is in the process of securing licenses with projects timeline to be deployed in the next 2 to 3 years. To date, VinEnergo has announced 2 green projects in Hà with combined capacity of approximately 900 megawatt hours. And in addition, we have also secured license for an LNG plant in Haiphong with capacity of 4.8 gigawatt. Of course, we will be making further announcements of new projects that come online in due course. The next question is from Meng from VCBF. Could you please update the investment project of VinMetal? What makes such an investment attractive to Vingroup? And what is the investment capex and timeline? Have you secured funding for the investment? Thank you, Meng. So as we have previously announced, we have established VinMetal with the purpose of developing steel to first and foremost facilitate the demand within Vingroup's ecosystem. So we have announced that we will be developing a plant at the Vũng Áng industrial zone, and it is intended to have capacity of up to 5 million tons per year, and to be developed in phases. So as a start, VinMetal will be focusing on construction steel as well as hot rolled coil, HRC, in order to provide to the various businesses within Vingroup's ecosystem, including Vinhomes and Vincons, our construction company, as well as VinFast and our affiliate VinSpeed in high-speed rail development. And this is really to ensure a stable and ready supply of steel, especially in the context that we are rolling out our mega-scale projects simultaneously across the country. And then to the extent that such internal demand is satisfied, then we will be looking at potentially supplying and addressing external demand as well. In terms of funding, it would be via a combination of equity as well as debt financing. We will be sharing with you further details in due course. The next question is from Jason. Please help us understand the gross margin outlook for property sales and industrial business segment. Should we expect a similar gross margin for 2026? So first, let me address the gross margin profile for VinFast. So in Q4 of 2025, gross margin was negative 18%. And this represents a significant improvement of 54 points compared to Q3 of this year. So a Q over Q improvement. And compared to the same period last year, it was an improvement of 12 percentage points. This is primarily thanks to a combination of factors. First of all, is higher production scale, and also better optimization of BOM cost as well as production cost. As we've noted in our presentation, there are certain one-off kind of items, which is in relation to deferred revenue, for which revenue is not yet recognized, but we recognize full cost, as well as accelerated depreciation of some of the production lines. After we've accounted for such one-off items, then gross margin improvement was 34 percentage points compared to the previous quarter, and 15 percentage points improvement compared to Q4 of 2024. What we've noted is that BOM cost has reduced by 4% Q over Q, and production cost reduced by 9% Q over Q. So as a result, compared to Q4 last year, bills of materials BOM cost reduced by 10%, and production costs reduced by a further 17%. Based on our assessment in 2026, we definitely would expect margins to improve further as a few things. First of all, we are migrating production to our new platforms, which would basically allow us to look at a more leaner bills of material structure. We're also looking at higher level of local content. There would be suppliers opening up their shops very much close to VinFast factory plant, as well as there will be standardization of parts that could be used and shared among various platforms. We are also entering into long-term contracts with supplier with higher scale of production. So all of that would help to improve the gross margin profile for VinFast in 2026. And it's also important to note that at the current level of production and sales, certain models, including VF3 and VF5, if you look at the cash margin profile, they have already achieved a positive gross margin. So with regards to the question about the gross margin outlook for property sales, I would say that in the medium to long term, we're looking at approximately 40% gross margin across the board. And this is really driven by a mix of products for each reporting period. As you probably are familiar, we have different margin products, whether it's box sales or retail, whether it's low rise or high rise. So overall, each of our products line has fairly, I would say, stable and consistent margins. So fluctuations from one period to another is primarily driven by product mix. So the next question is from Nga with regards to the refinancing plan for 2026. So as we've shared in the presentation, the total debt due this year, and that excludes revolving bank loan, amounts to about $1.76 billion US dollars. And I would say that about 3/4 of that comprise of domestic financing in the form of bonds and loans. And then the remaining 1/4 comprises of syndicated facility, which is international financing. So given the market conditions, we remain fairly confident of our ability to refinance the domestic portions. And with regards to the international financing portion of the amount due, I would say that out of this, about half are amortization of existing facilities, which would be taken care of with cash flow from operation. And then the remaining half is a retirement of a syndicated facility in the second half of this year. And for that, we would be engaging with banks for a refinancing exercise. Overall, I would say that the international capital markets have been quite conducive, increasingly this year, as in like 2025. And overall, across the group, we have been able to raise over 1 billion of new, debt from the international capital markets, and a good portion of that is towards the second half of the 2025. So overall, I would say that the debt maturity for this year is something that we're quite comfortable with. So the next question is from Ven. Can you share information on construction and sales schedule of Olympic sports project? So this is definitely one of the key projects for the group in the upcoming 3 to 5 years. And we would be more than happy to provide further information as soon as possible when, we can share at an appropriate time. The next question is from Tok. Could you please update pre-sales plan and timeline for property projects like Giang Bo, Mei Chi, and Galaxy in Hanoi? So I would say that these are projects that are of relatively smaller scales compared to some of the projects that we have launched or will be launching this year. We have already, identified a different sales plan for these projects, including box sales as well as retail sales, depending on market conditions. So we will be able to update you, at an appropriate time later. The next question is also from Tok. Could you please explain the key reasons behind the hospitality's negative EBIT in Q4 2025? Was this due to seasonality or any one-off expense? So you're right, Tok. So I think seasonality-wise, Q4 is a relatively softer season for Vinpearl overall. I think this year in particular, we have seen storms, etc., in Nha Trang, which has definitely affected the level of guests and visits to our Vinpearl facilities. That said, we still see a very solid improvement in terms of operating efficiency. So this year in Q4, operating EBIT margin for Vinpearl is 31%, which is a pretty good step up of 4 percentage points improvement compared to the same period last year.
Hi, we have now concluded the Q&A session as there is no more questions sending from our investor or analyst. So thank you again for joining us today. Should you have any clarification, please send an email to us at ir@vingroup.net. The Vingroup IR team will be participating in the following upcoming investor conferences: Vietnam's Assess